Joining me on Startup Report today is Chris Pizzo from SCP&Co. Welcome.
Thanks, Joe.
Good to see you. So we had a couple of things to cover. First, I want to just dig into what SCP&Co does. You've got a SPAC, and then you got a pretty cool announcement for something coming up here in the next month or two. So give us a quick overview on SCP&Co.
Yeah, so SCP&Co was originally an investment bank back in the day of 2001, Skyway Capital Partners. And from there, the guys built up their own portfolio along the way. Really wanted to be on the private equity side, so they sold off the Skyway Investment Bank to some existing employees that still run it today. Marty Traber, Roger Overby. And then really they have a deep background in healthcare technology and real estate. And my background is actually healthcare and technology. I was a digital health founder, didn't work out the way I wanted to, learned a lot along the way, met a lot of great people. I was at a family office for 3.5 years doing a lot of early stage investments with a focus on digital health. I worked for Jeff Vinnick's incubator, early tech hub under Lakshmi, which really has amazing entrepreneurs, a beautiful culture. And, a lot of these entrepreneurs just need help getting to where they want to be. How do you get to an investable level? How do you think about it from an investor's point of view? How do you become scalable, foundationally scalable? And I didn't plan on leaving, but these guys that I work for now at SCP&Co, Brian Carino, Scott Fewer, they had this big vision. How do we play big with Andreessen Horowitz and the Tiger Globals of the world, when traditionally they invest off their own balance sheets? So we went out and raised a $230 million digital health SPAC. And we have some great names, local names on there. Tim Main's on our board from Jabil. David Kretschmer, who's past Chief Investment Officer of Anthem. We have Randy Parker, who started MD Live and sold that to Cigna's Evernorth for over $2 billion. We have Dr. Mohit Kushal, who was on Obama's White House Health IT Task Force, also a general advisor for General Atlantic, a senior advisor for General Atlantic, rather. And then we also have a gentleman by the name of Alan Gold, who was a pioneer, 3 multi-billion-dollar biotech REITs. So really, we have this great team. We're looking for info-driven, tech-enabled healthcare platforms that could really benefit by becoming a public company and potentially using these use of proceeds by M&A, whether it's capital to recruit talent, retain talent. It's the cheapest cost of capital. So we've been doing this for about 8-9 months now. We've been speed dating a lot of great companies. We've expanded our network almost 100-fold, right? We've been talking to probably 80 different venture capital PE groups around, probably over 150 companies globally. And something that's interesting is, COVID really decentralized entrepreneurs. They decentralized capital. There's really a renaissance going around where you can be geographically agnostic and still attract all of this. And so that's really the SPAC. I mentioned before that I was working at Embark Collective, and even before that, I was actually interested in the crypto community when Gabe and Rosa were spinning up block spaces over by 81 Bay on Gandhi. I knew Michael O'Rourke before that, and his partners building Pocket. I got in the space at 2015 and went down the rabbit hole then. And so what I've seen by taking a step back and looking at this perch is that coming to Tampa in 2012, what I've seen is tremendously successful entrepreneurs moving here. There's a lot of focus on capital coming here now. You look at Kathy Wood's arc coming down too, and just seeing kind of this center of gravity building. So it's funny, Michael and I were talking about, Pocket's been a great success. I get to see so many deals, and he's not saying this, I'm saying it for him, because Michael's a super humble guy. And I'm like, look, I'm a part of the investment side. You see a lot of great deals all the time, or great opportunities. Why don't we do something fun together? And so I broached the idea with my team, and one thing led to another. We're bringing Gabe from Block Spaces on to be kind of our subject matter expert in blockchain, also when we run nodes. But essentially, we're going to be spinning up a small little crypto fund focusing on anchor and partners, being Pocket, Block Spaces, Brave Browser, as the control investors are here in Tampa and Austin, and they're good friends of ours, and part of their family office invested in our SPAC. And then a couple others that I can't name today that I really am excited to mention later. But we started with $2 million. It was oversubscribed. We have a cap at $5 million. Initial docs will go out in early December. And we have a few deals that are kind of warehoused right now that are really exciting, that could be really big. And Joe, talking to you, I saw you at the Bitcoin blockchain conference here in Tampa, and the buzz and the vibe going on there. You're working on some great things. Some really smart people in the space are working on some great things, and I'm just a believer where it's going to go. I think it's a movement. You hear about Web 2 to Web 3, and we can get into that. But it's not going to be just an immediate, we're in Web 3. It's going to be a constant movement. It's a point in time when you really feel that your digital life may not necessarily be more valuable, but you pay more attention to it. It's also kind of freeing the shackles of those choke points and, distributing value to the creators and the users and the people that keep the networks up, which is so exciting to me. You see Andreessen Horowitz raising $2.2 billion. You see Paradigm just raised $2.5 billion. You see Constitution DAO that's going to put the Constitution for $20 million to tokenize that. And you see these types of activities with Disney getting NFTs, McLaren, Reddit doing their karma points in the crypto, and it's you just feel it once you get in. And I think the biggest barrier right now is, quite frankly, education. And because people that have been in the space for a while, they tend to kind of, I don't want to say shun people that kind of want to ease in, but if anybody's skeptical, you get some Bitcoin maximalists saying, "Oh, you just don't believe it," yada yada yada, right? But in order for this whole community, which is what Web3 is all about, is community, to really penetrate everyday lives, we're going to have to overcome that and educate everybody.
That's great. Well, very excited about that element of things. I want to back up a tiny bit, a few things to dig into just in understanding SCP. So, when the company's forked, to use we'll bring the blockchain term in. Were you were actively investing for a while before the SPAC? The SPAC kind of came after roots were planted. And you mentioned with regard to the SPAC, Tiger Global is a bit of a juggernaut, right? They have I guess throw spaghetti at the wall model to see what sticks kind of thing, and they're throwing money, overpaying and under due diligencing. That's a bit harsh way to say it, but so how do those folks, if you believe that the money is not the rarity factor anymore, it's the good companies to invest in that are the rarity factor. So how do people like Tiger and that overabundance of money, both institutional money and then even coin offerings that can let the general public fund these companies, how does that change your investment philosophy?
It's a great question. SCP, we've done over $2 billion in transaction volume, over 80 deals. We traditionally do 1 or 2 platforms a year, and then we do bolt-ons, as we like those centers of gravity. But it's a great question going over to how do we play there, and how do other companies like Tiger Global is basically capital as a service. And that's what they say. Their strategy is not to roll up their sleeves and add value in terms of where the company should be, where it should go. They are more so, hey, I want to make 3 to 5x in 5-10 years, and that's fine with me. I'm going to give you an overvaluation, something that you can hopefully grow into. It's twofold, right? On one side, you get a higher valuation, get a lot of money. On the second side, if you're a $20 million company or doing 20 million ARR a year, and you're valued at $2 billion, if you do 40 million, you're going to be a $4 billion company. So the justification there between private markets and the leap to public markets, what that appetite looks like, is really kind of clashing. The markets are choppy, for lack of a better word, right now, especially in SPACs. There's a term called PIPE, which is private investment in public equity. And typically, without getting too deep into it, when you propose a deal, it comes to a point where existing investors in the book and the trust value can redeem stock, redeem their shares, but still vote yes for it to go through. The issue is when they redeem, it minimizes the amount of capital that can go to the company, to the balance sheet, to provide liquidity for investors. And so then you have to go to a pipe market to basically replenish that loss of capital. The pipe market also validates kind of the valuation you're putting on a company, and you can also get some really strong fundamental investors, but it's overexhausted, it's overheated. And so what does that do? It really kind of puts a pause on things. IPO market suffering the same thing. It's just too much was allocated up front. But you still have the Tiger Globals, you still have the A16Zs. They're great at what they do, but they're still pushing on basically pig in the python, right? Yeah. They're still feeding this. And there's only so much you can do to get them public. And so these companies are overvalued, a lot of them to me. A lot of them have no business being there. A lot of them do. But it makes hard the diligence process. And so you mentioned, what does that do in terms of kind of perhaps tokenizing shares? I think that's where you're kind of going.
Yeah.
To some extent, right? And kind of giving people the ability, or the average investor, to kind of invest in these companies, or whether it be existing or in the future of Web3. But I think when you have an external community vote on what looks like a good company, even if you're not a savvy or sophisticated investor, you're probably going to purchase it because you really believe in it and you really like the product or you use it and you think the team's great. And that's really what the Web3 is about is in the underwriting process, it's all about team, community, and really, what if this does take off? Because it's asymmetric risk reward in this paradigm right now. A lot of it's going to go to zero. You look at the internet before, kind of that early 2000, kind of March 2000, or before that, rather, there were some cracks in there too. But what came out of it, right? You have the FANG companies, you have Twitters of the world, which we can get into in a little bit, that they have their own problems, but they're better than they were. They're more scalable. They've really helped a lot of people get a voice that they didn't have before. They help families keep together. But you can like things, and as an artist, as a journalist, what does that mean to you? It means that, one, yeah, you can get a better brand name, but two, you're not getting any of that money. You can get a little bit, but they're taking 30 to 100% of that value. And so there's a big opportunity to disrupt that.
Yeah, and that's where we're trying to build with MetaCities. We want to be, the companies of the next few years will be the Web 2 to Web 3 bridges, right? Where, used to be YouTube, you went on and that's where you made your money if you're a creator, and they kept a big chunk of it. Now people leverage YouTube just to drive the traffic to the Substacks of the world, and then that lets the creator get the bulk of the value instead of those intermediaries. So, still value in aggregating that traffic and aggregating those eyeballs so you can get them to your, subscribe to you on Substack, but not 30-40% of the value. And that's what the world's waking up to.
Yeah.
But yeah, a lot of those things you mentioned to me are, what's really putting the squeeze on the traditional investment model, which is why I find interesting, because I think there was already a decline in really going public being at the end of the rainbow, because there's so much private money available. Then you throw in that they printed $1 trillion in the last couple of years, or printed in quotes. You're opening, you're relaxing the accreditation requirements. So you've got this these startup platforms where you can go out and just raise at $100 and $200 increments from the general public, and then you've got the whole world of tokens. So that's, and to all of those just end up adding more demand for deals. Thus, the valuations go up, and the due diligence goes down, and all that really pains, I think, of people who are used to the traditional balance.
No, you're absolutely right. I think the diligence process is a big thing, because you have some existing private equity investors or venture groups that, maybe take a few months to underwrite a deal. When now you have maybe a couple weeks, what does that do to the process? Does that really shake up? I mean, I think it goes back to your fiduciary responsibilities to your LPs. How do you make sure that this is a well underwritten deal? At least what we're thinking about right now is this is a pilot fund to kind of bring in people that can help get this done, and think about it in ways. I mean, when we launch later, there'll be some great names that everybody's heard about that's been in the space since 2011, building businesses, raising money, investing. But it's going to be a learning curve. SEC's learning. Regulatory bodies are learning. What does this look like? What risk factors have to be disclosed to investors? And I think at the end of the day, it's going to be the people that kind of see it going forward, or they have kind of this absurd amount of investable net worth. That's, let's take a flyer and I'll learn along the way, which is also great. But how do you get kind of normal people involved in crypto? How do you say, you can actually invest in that? You can own a piece of this. You can own and vote for what you think is appropriate where this business goes, with DAOs, the centralized asset organizations. You can own a piece of the internet in terms of NFTs. I think it's in its primitive state. I think, if you think about its computer code and the applications you can build on top are really exciting. But when you see some crypto punks going for $1.5 million, it's really like, what does that mean, right? And so I think, as with any kind of nascent industry with a lot of money getting thrown in it and a lot of people that have made generational wealth in the space, quite frankly, there's going to be a renaissance. There's going to be a reckoning, and there's going to be a renaissance. And I think actually, right now in Tampa Bay especially, there's a lot of people, believe it or not, that have been in the space for a while, that are evangelizing it, that are building businesses, that have made a lot of money and want to reinvest in these entrepreneurs. If you look at Silicon Valley, that's similar to how it started, right? You have some early tech operators that sold their businesses and reinvest in these up and coming companies. Sure, Stanford's there and they gave some grants and stuff like that, and Xerox and blah, blah, blah. But at the end of the day, it was entrepreneurs that made money investing back in their communities. And I see a lot of that happening here. It's exciting.
Yeah. And it's, and largely it's inevitable, right? There's so much of the value that's created in the world is digital now. You just, and so you have to have a way to digitally own that and digitally represent that ownership. So, as with all these things, it's a bit of a generational gap. I think that, the kids that are playing Minecraft right now that, have whole economies that are building on platform, the minute they can start to port those things between platforms, then that's just, then it just becomes the norm.
Yeah, I think the interoperability is extremely exciting. I don't think it's the only thing. I think it's early stage to think about, right? I mean, anybody, any kind of nerd like myself or a gamer, Ready Player One, right? It's something you go to, which is a closed type of metaverse, and we don't want Meta to take that over like Zuckerberg. Right. I think there'll be a portion of it. But those big companies, I think, do have a place. It's funny, I think Zuckerberg was saying Apple's kind of the arch enemy here, as they've really infiltrated in terms of devices and connectivity to the internet. What can they really do? But it'll be interesting the way it plays out. I think it's actually now is more important than ever for kind of the communities to continue decentralizing and building upon that value. But look, a big issue is going to be honestly custody of this stuff. There's a lot of scammers. There's a lot of hustlers. There's a lot of people that want your money. And how do you underwrite that if you're just dipping your toe in? I'd say the easiest way to do this is buy some Bitcoin. Do a little research, dip your toe in, get some Ethereum and understand, take that orange pill, take the red pill, go down and actually see, what does this mean? Because it's just computers working together, and it's this whole decentralized way to kind of prove and checks and balances and the immutability and yada, 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 all the buzzwords that you want to hear about. But at the end of the day, it's a programmable future that we can really build upon in this digital age.
And when you look at standing up an early stage crypto investment fund, do you see then, if you're coming in at seed or even pre-seed, is the Series A an ICO, or is it more equity? How do you think the breakdown will be for this?
So our funds specifically, it's going to have a little blend. It's going to be a hybrid approach. We are going to look for earlier stage deal, let's say seed, a little proof of concept. Obviously, we want to check community, like I said before, and vet the team tremendously. There are going to be some flyers, but at the same time, we want to underwrite to the best of our ability. So how do we also help the company? One, I think we're going to do early stage equity, similar to venture, but we're gonna explore different ways of that, whether it's tokenized equity to really provide some liquidity to investors and liquidity to the team. Also, in terms of being able to sell that or at least stake some of those tokens to power the ecosystem. Like I think about Pocket, right? It's its own chain, not an ERC20 token. So the best way for me to do this, working with Michael, I'm staking nodes. Through Blockspace, two of our partners. And I see that as a flywheel. So if we can find companies like that or build upon Michael's decentralized, RPC platform, I think that's great. You see Brave, trying to really take over DuckDuckGo, eliminate those ads that we talked about before and reward people to use or to view ads rather. I think there's a lot of opportunity within that. But so it'll be a blend, back to your question, it'll probably be a blend of kind of traditional venture equity and then also tokens.
Cool. So, anybody interested? Anybody's listening and is interested in learning more about, potentially joining this fund. Where should they go? SCP&Co, I think .com is the website.
Yeah. So actually, they can just email me directly. We still have the name of the group's going to be Druid Ventures. There's going to be a website launch. The fund docs are going out. We're going to have a marketing campaign. We have a few deals warehouse, which I talked about. So it's all going to come together pretty fast. And also the other people we're bringing on that I couldn't mention will also be, touting this out from their respective influencer platforms, if you will. But my email is cpizzo, CPIZZO at scpandco.com. So that's cpizzo at scpandco.com.
Cool. And we'll add it to the bottom of the video as well so you can see it. Appreciate you stopping by. It's very, it's great. Like I said, we need to get this stuff rolling here. We've gotten a great start with some of the companies that you've mentioned. And, this is the time when all the prime real estate is available. Miami's doing a good job of sort of clearing some path for us. And we need to capitalize on it. Yeah.
And Mayor Castor, kudos to you for taking, what was it, our first two paychecks in Bitcoin. I mean, it shows a lot, and I'm super proud to be in this area right now. And Kathy, coming on down, love to meet you. Would love to have part of that fintech, or at least half of it, be crypto focused. So anyways, thanks for listening to me ranting. Appreciate it. Love to meet anybody that wants to chat. We're just beginning. We're still early. Don't think we're late. Now's the time.